All right. Welcome to Traders Talk, and this is Meng Hon, your host for today. Yeah, so it's another Tuesday, and very exciting to be here with you guys. And for those who are here, please give me a thumbs up if you can actually hear me well, and we will start our session. Okay, this is for those who are first time joining us. This is actually a show where I will actually talk about trading as the main topic, and of course I will also cover financial literacy. Yeah, so for those who are actually interested to learn more about finance, learn more about trading, learn more how to generate income, so this is the show for you. And we have been hosting this show for quite some time right now. I think there is actually about more over 20 over weeks which we have actually covered various topics. And if you are keen to see the old topics, right, the previous topics, it is actually all on our Facebook page. My style work, trading style that works. It works. Yeah, so you can actually go to our Facebook page and actually see all the 20 over past series of Traders Talk. And of course, each of the week we cover something very special. It can be just on financial literacy. And recently, we have also started to actually cover a lot more on trading strategies, and also starting to actually cover some interesting stocks and development in the market. Yeah, and today is no different. Today we will actually talk about interest rates. Yeah, and how interest rate actually affect the stock market, and whether you should take care of your investment patterns and also your trading patterns because of interest rate. Yeah, so we'll actually cover this today. Okay, all right. Yeah, so let me just set up some stuff here. the background is moving. Okay, all right. Okay, good. Yeah, so are there any people who have actually joined us for the first time? I welcome you. And yes, we are live. Yeah, so we are live right now. And you can also post any questions which you have in the chat box. And then during the show, I will also cover whenever there is actually an opportunity, or if you have any questions, you can also post, or comments you can also post in the show. And if you know people who are actually interested to learn trading, interested to learn about the stock market, how they can actually generate income, yeah, please share this show with them also. Yeah, so that is all my marketing and promotion for the show. So we'll just move over to actually talk about the markets first. And let's check the market today. Yesterday the market is actually slightly down. Yeah, and of course this I would say mainly also came because of the jitters on interest rate. If you have followed yesterday, President Biden have actually renewed the the second term of Jay Powell, the Fed chairman. He is going to continue to become the Fed chairman, and of course, when this happens, then there's actually two things that will actually happen in the market. Of course, one is because Jay Powell is already running the Fed for some years right now, together with all the policies which was actually implemented, especially during the pandemic and post-pandemic. Not post-pandemic, we are still in the pandemic. In another way, yeah. So the current situation, of course, the policies would likely to continue because it's actually coming from the same chairman. Yeah. And of course, this is does not give much uncertainty to the market. Yeah, because all the things which he actually wanted to implement and all are already made known. in particular interest rate hikes, it is already made known that the interest rate will actually start to be hiked as soon as next year. And let's see. And of course, the second thing is also the continuation of his things. That means the things which he said on interest rate hike will come, right? So of course, with that, then of course the market would how to say would say that there won't be any change, and as a result of that, the interest rate hike will come. Yeah, that means there is not likely having a change, that the interest rate hike not coming. And because of that, of course, the market was a bit negative yesterday, especially on the Nasdaq market, which actually came down about 190 points. Yeah, 190 points. Yeah. So Nasdaq actually came down 190 points yesterday, and it also brought down what is that? It also brought down SPX. Let me put this here. It also brought down SPX, but SPX effect is actually quite small. It's only about 15 points, if not mistaken. Yeah. And it all happened, I think, probably second half of the session, because I already slept. I only saw the negative, the rate only after I woke up this morning. Okay, let's put up the chart, and let's see the market. Actually, there's nothing much to speak also on the markets, you see. This is actually, let me see. Oops. Okay. Wait. I lost my screen. Let me just hang on a sec. Too many screens open. Let me close all of them. Oh, okay. It went to my second screen. Okay, let's bring it back. Okay, SPX, right? Okay, last week we actually spoke to say that the uptrend is a bit constipated, right? Yeah. You see, last week we were actually speaking about this. Let me delete this. I don't want this. Okay. Last week the market was actually up, right? And I was saying that the uptrend is not so smooth, a bit constipated, and the market still has some reservations or uncertainties lah. And if you look at the price levels here, right, it tried to actually breach the previous level here, right, which is this level about 4718, right? Yeah. So at this level, right, 4718, it actually tried one time here. It did not manage to go up above it two times here. And yesterday, it actually closed even below it, you see, with this big bearish pin bar, big bearish pin bar. And of course, today, the market early this morning was a bit red. Let's check the futures. Futures is slightly down. I mean, S&P 500 futures is actually down about 6 points. Yeah, and Nasdaq is actually also down by 65 points. Yeah. Later I will cover, of course, the impact of interest rate would actually be more relevant for Nasdaq companies. Yeah, mainly because these are actually tech companies, and I will also let you know the reasons behind that. Yeah. And of course, last week what happened? I think last week basically the news which were more interesting were actually on this company lah. What company is that? RIVN. Okay, there's this tech company which listed I think about a week plus ago. Yeah, a week plus ago. You can actually see here, right? It's actually called Rivian, right? Okay, Rivian is actually electric vehicle lah. electric vehicle, and of course they do, what is that, trucks, I think, trucks, yeah. It's like a startup lah. I mean, they only probably produce a few hundred cars and they got listed. And of course, when they went for listing after that, I think they got a valuation of way above 100 billion. 100 billion 100 billion not million okay. So a company doing EV have a market cap of 110 or 120 billion. Probably now lower because it has actually dropped from a high of about what's that, 175, 180. Now it's actually about 118. Yeah. Of course, their partners, their shareholders are big companies. Amazon is one, and of course the other one was Ford. And yesterday, Ford announced that they are actually stopping the development of, that means the joint venture of developing trucks with them. Instead, they are actually going to focus back on their own truck, which is that F-150 or something like that. Yeah. So of course, because of that, it has also dropped down quite a lot. So this is, to me, again, people would want to actually try to work this as next Tesla. The same like Neo, right? I mean, when Neo first started to actually talk about doing EV, right? And it was actually quite hot back then. Neo, right? Neo, you see Neo, right? Let's see Neo, what happened to Neo. Let's put it longer. Yeah, this is Neo. Neo is the China EV lah. You see, it went all the way up. How much? let's see. 2021, right? Okay, it went all the way up to about $68 lah. $68, and now it's actually at 41. Okay, not too bad lah. I mean, 68 to 41 lah. But don't forget from what price they came up from. Probably, you see, is like from $10. So from $10 to $40 right now lah. That was actually new, and now this company Riven. There's another one, LCR, Lucid, right? Lucid is also EV, I think. Yeah, and of course, if you look at this, it went up to from $12 or $10. It went all the way up to about 64, and then now it's actually coming up again. And of course, the reason why they come up again, I would say partly also because of the Tesla run up. That's one. And of course, when the talk of Rivian listing, right, and Rivian listed, it also pulled up. I would say it also pull this up, like, yeah. And I mean, these are just a lot of market hype, and of course, depending on where you went in, of course, if you went in on the top and we came down, of course, that is going to be something very hurtful. Of course, if you are someone who are down here going up, then of course you are going to be a very happy person and support all these kind of stocks. Yeah, but of course, for me, I still think going back to fundamentals on a long-term investment horizon is something core for me, at least, and of course for a lot of other people. If you chase, there are bound to be situations that you will hit an accident at one point in time. Yeah, I mean, if you are putting your hard-earned money or your savings into it, right, then of course the risk is much higher, because once you get hit, you will be very what is that, sad lah. I mean, it's your money, right? But of course, if you have already made a lot of money and then you're putting in those money which you made or walk or gain, right, then of course that's less hurtful lah. I mean, that's less hurtful. And again, also running on this EV, right, Apple also shot up about how much here? $10, $13. Yeah, but yesterday it came down. Yesterday, I think initially I saw Apple was actually up about $3 to $4, but post the announcement of this Jay Powell as the to continue as the Fed chairman, right? Then Apple actually came down, only up by about 40 over cents. Before that, I think it was $3 over. Yeah, for me, I think it will probably settle down lah. Settle down, probably come down a bit from the top here. I mean, it's actually shot up too fast lah for Apple. Yeah. Just purely on the basis of it making an announcement to say that it is actually going into, not going into, it is talking again on this EV project lah. Because the EV project is actually not new for Apple. Is it? I don't recall which time in the past, right? They have also spoken about this EV project of them. They actually put in a patent for electric vehicle and all those kind of things, and then it ran up, and then of course post that you don't see the effect lah. So this is market news and market hype lah. People just chase for all this. Yeah. Okay, so that is actually last week, and of course some earnings on Target. Last week we spoke about Target, right? And of course what I mentioned is that during this round earnings, there is actually a lot of companies which actually made earnings announcement, and post earnings, although the earnings are actually not too bad, the results is actually, I mean, the price react actually negatively. Yeah, if you look at Target, right? I mean, here Target is actually reported earnings of $3, right? Estimate was only 282. Yeah, but if you look at the price, if you look at the price, right, it is actually down by a lot. Yeah. So again, this depending on how you see it, and I see this kind of patterns actually quite what is that? Quite some opportunity, and of course it went up slightly a bit up, and I would want it to go down to this level here lah. Yeah, which is the 150 EMA. Yeah, 150 EMA. And yesterday it went further down because it says that Thanksgiving, that means Thanksgiving is actually going to close all their stores. Traditionally they open their stores on Thanksgiving, which is next Friday, right? They say they're going to close their stores, and of course the price also dropped down yesterday. Okay, so earnings are Target. The other one which again similar situation, this is actually on Moderna. Yeah, Moderna made their announcement here, and of course what was their earnings? Earnings was 768. Sorry, no, reported 770, estimate 897. Okay, they missed earnings. By a bit lah. How much? 14%, right? But I think they came down about 20 over percent. After post earnings, the price actually kept down. Yeah, and of course when this happened, and if you look at this Moderna, right? In the past, it don't have this kind of gap down, is it? Yeah, it don't have this kind of gap down. So of course when this happened, then of course I mean we managed to put in some positions, bullish positions lah. Yeah, bullish positions, and it continued to went down, because it went up here, continued to went down for about a week, but after that it slowly crept up, and up till yesterday, I think they actually made an announcement that they are also approved for third booster jabs or something. Yeah, and of course the price again shot up about 7% yesterday. And on that, yesterday I exited the position, which we did it post earnings. Yeah, so this time round post earnings trades work quite well because of all the unexpected drop in price, and then after that the market just continue to actually push it up again. Yeah. So these are all surprise movements in the market, which we managed to actually take the opportunity, but only for strong stocks. I mean, if you have conviction that this stock is actually strong, and when they actually had a huge drop down, then you can actually put in a position. For me, it's actually quite safe if it is actually a strong company. If it is not strong, then of course, however much they gap down, I mean, it will continue to go down. Yeah, I mean, we also have some positions which did not recover until now. It's not that all the positions which we actually enter on this basis works, but it works better if the company is actually strong. Yeah, it will eventually go up. So time your entries. Give a bit more buffer. Yeah, I mean, for me, I'm actually trading more on options. Yeah, more on options. Yeah, so I would have I can actually structure out my trades a bit more flexible. I don't put in stops. That means I have a mental stop, but basically I give it a time for it to actually recover. Yeah, generally I would say at least more than 1 month. Yeah, more than 30 days or 45 days at best. That means the next, I would normally place it the next 1 or 2 monthly expiry. For example, this actually happened in announcement was November, right? So I think I put in December trade, December expiry. Yeah, that means it's actually the following two: November expiry, December expiry. Yeah, to give it time to gestate. Okay, so these are some of the things which happen, and of course, just to share with you guys. Yeah. Okay. Let's go to the topic. Yeah, Lucid Motors. Did you buy? Did you go into Lucid? Lucid. I I'm very scared of all these stocks. Especially if the price is actually very high. Uh, some people ask me on this Rivian, whether they can actually do trades on Rivian. I would not do anything on Rivian for the time being. I mean, for those who are actually putting in trades on Rivian, I mean, it's very speculative because it was just listed less than 2 weeks, and there is no. I mean, it's speculative. I mean, the company has nothing. I mean, of course, if the price goes up, it's basically what the market um, uh, uh, give it. I mean, give it. That means if the market wants to buy in, everybody wants to buy in, then of course the price will actually go up. You see, and of course, when people who probably have a bigger chunk of stocks than you want to sell out, right? That means you you are enticed to go in, right? And when the price go up, say now it's how much? Now it's 100 over, right? 120, right? So if the price go up to 300, you think the people who hold the shares don't want to sell it. Yeah, they will probably sell their shares and make their money, you see. Then pull you holding the stocks at 300 coming down to probably 100 or 50 or something. So no lah, I mean, not for me lah. Yeah, all these stocks, I would prefer to go on more predictable, safer counters lah. Yeah, because all those you can actually structure better trades based on the price trends and all these kind of things. Okay. Okay. So tech stocks, right? This one will cover. Okay. This one is blank. Okay. Interest rates. Okay. So interest rates, right? What impact does it have actually on stocks? Okay, I mean interest rate basically is a borrowing cost, right? It's a borrowing cost. And current the current yesterday the 10-year US Treasury yields went up to 1.65%, I think 1.65%. Yeah, and of course that is actually already a high rate, more or less the top-ish rate already lah. Yeah, before this it was hovering about 1.4, 1.5, 1.5. Yeah, and in yesterday it went up to 1.65 basis points. But sorry, 1.65%. Yeah, and because of that, then of course the Nasdaq actually started to come down. Yeah, and it affect more on tech stocks, and of course the reason why it affects more on tech counters lah is of course there's two things. One is a lot of tech companies, right, actually rely on borrowings. Yeah, and when they rely on borrowings and when the interest rates goes up, that means this is actually a higher cost of business for them. And when there's actually higher cost of business means less earnings, right? Yeah, and of course when the earnings are actually lower, that will affect valuation. That means the company valuation will also come down. Yeah, that's why when interest rate goes up, Nasdaq comes down. That is one of the reason. The earnings will actually come down going forward. And the second one is actually on what is that? The second one is actually on interest rates is used to do their valuation. That means the company's valuation, that means their forecast, that means how much the company is worth, right? Is based on certain kind of projections. And on these projections, right, there is actually an element of interest rate which they actually use to discount the valuation. And of course, when this rate is higher, right, that will actually result in a lower valuation. Yeah, that's why when the rates actually came down to probably about zero during the early part of the pandemic, right, all the counters rallied. That means all the, especially on the tech stocks, right, it all rallied up because interest rate low, ma. Borrow money technically free one. Borrow money is free. So when borrowing money is free, and then of course the rate used to discount the company is lower, they get a higher valuation. As a result of that, even if they rarely they go higher, right, the market still accepts it. People would be still okay. But of course now the situation is a bit different, and of course if the rates continue to go up next year, right, they said it's 2 hikes or 3 hikes next year, probably go up to by another 1.75% on top of the current rate lah. Yeah. So if you actually go up again, the two things like which I mentioned, I mean, borrowing cost becomes more expensive, and then valuation become lower. Yeah, and of course overall for the economy, right, the economy would also come down. I mean, generally, like people like you and me lah, I mean, we are all holding debts. Who is debt free here? Who don't have debts? Yeah. Okay, so we are all holding debts, and if people hold debts, then it is actually more expensive. That means it's a cost to them. They will need to pay the banks more. Okay, and when they pay the bank more, then what will happen is that they have less money to spend. When they have less money to spend, less money to use, less money to buy computer, less money to buy handphone, less money to buy car, less money to buy house. So what happens to the overall economy? It comes down, no? It comes down, no? So interest rate goes up, economy come down. That's the general thing that will actually happen. Yeah, that's why when pandemic came, right, economy is down. Cut interest rate, no? No need, no? Just spend, no? When you spend, the economy go up, share market go up because all the company make money. Yeah, so that's the thing. Okay, then what else? Okay, there's actually some industries which will benefit on interest rate hike. Yeah, I mean tech will not benefit so much lah, especially if the companies are actually have borrowings and is actually loss making. Yeah, okay, but the sector which will benefit is actually banks. Yeah, banks will actually benefit because they charge you interest, ma. Higher interest means more money for them, ma. Correct lah. Yeah. So banks will actually go up. That's why yesterday all the bank stocks went up. All the bank stocks went up. Yeah. Yeah. So I mean, we have some positions on Goldman Sachs and also JP Morgan, Citibank also. Yeah. So all this was green yesterday. Before that, it were actually all coming down. I mean, we were taking a bit loss. Yesterday, the recovery started to come. Hopefully, it continue to actually go up, and then we can actually exit the positions. Yeah. So bank stocks will gain. So that's why in your portfolios, right? In your portfolio, even in your trading portfolio, right? You have to diversify a bit in terms of your positions, yeah. So if you have only all tech counters, right? Then that means the whole everything would be red like yesterday. Yeah. But of course, if I have a diversity of other counters inside there, then of course the other sectors can bring neutralize the position or bring it up until the recovery comes on the tech side. Yeah. Because for me, these are actually all so-called knee jerk what is that um reaction. Interest rate hike is not new, which I will just show you later. It is actually not a new talk. It has been there. uh the market has already factored it into all their pricing, has already factored. So what is new if they say that Jerome Powell will continue to be the Fed chair and then the interest rate will continue to go up next year? It's nothing new, I mean, it's all known, correct or not? So at the end, it's actually a knee jerk. And of course, as a trader, right? I mean, as an investor, no change. I mean, come down, you just probably also hold the share, right? Yeah. But as a trader, this gives us more opportunities because when they are actually knee jerk reaction on the stocks, right? That's where we have the opportunity to actually put in trades. Yeah, because these are temporary situations and the things will actually adjust back. Okay, so today we will actually want to speak about tech stocks. Okay, as I said, the interest rate hike will have an effect on tech stocks. Okay, that is confirmed. That's confirmed. But not all tech stocks, right, will actually be affected by interest rate hikes. And I actually want to show you some of these companies, right, to see in the past whether the so-called rate hike has actually impacted it, and probably look at how much it has been impacted. Yeah. Okay, these are actually the top tech stocks for Q4 21. Okay, not I say one. Okay, it is actually I took this out from fools.com. Fools.com. They mentioned that these are top tech stocks for Q4. I mean, in a way, okay, all this for Q4 so far is not doing too bad lah. It's okay. Yeah, Amazon is okay. Microsoft is okay. Apple is very good. Intel, depending. Intel, after it made its announcement, I think in early November, it came down. Yeah, and it has actually gone up again, and we have also entered again the same situation post announcement. Stock price drop, opportunity to go in. We entered, and then we exited when after it actually went up. Now Intel is actually coming down again. Yeah, I mean, you can actually check the chart. I won't show you the chart. So Intel post announcement went up, come down. Now it's actually coming down, and when it actually comes down to probably about the level of let me just give you a figure. Intel, right? Okay, currently it's trading at $49. $49. Uh, yeah. 48 lah, I mean 48, I mean if it can continue to actually come down some more, probably maybe lah, I mean if it come down to 48, I mean it's actually a low price, quite a low price lah. I mean historically I think the lowest it went was about 40 this year lah, 43 to 45, 43 to 45, yeah, 43 for 45. I mean it won't be like AMD and all these stocks lah. I mean Intel is history lah. The hype now is of course AMD and Nvidia lah. Nvidia, Intel is the uncle of the chips, and then of course Cisco. I mean mainly doing the internet backbones and the hardwares, right? Netflix, I mean, is quite a run up a lot because of what is that? Squid Game and all. Meta, Facebook, Google, yeah. Okay, let's see Amazon. Okay, what this chart shows, right, is actually the orange line is actually the interest rate, the 10-year treasury yields, 10-year treasury yields. And then of course this is actually the price for Amazon. Yeah. So basically you see that there is actually a few spikes. I think the first one was actually in March. In March, right? It actually spiked to about 1.7%. Yeah. And of course, when the anticipation of the interest rate going up, right? Yeah, this was actually coming from probably, I don't know, 0 or something. Yeah, so it continued to creep up, right? Then of course if you look at the price, it actually came down. And this is not only Amazon. During this time in March, if you recall, the whole of Nasdaq also came down. That was actually the so-called first down, I mean the first in the year, the first reversal in the year. That was one time. Then of course this after I think about a few weeks again, it went down, it went up again. And then the second one, I think it was in May again, it came down, right? Then they spiked again in May. You can see it slightly came down, and again here, right? I think this is in September, if not mistaken. Yeah, then you can see when it started to go up again, slightly coming down. And I would say if we look at the micro, that means on this single stock, it actually went down, but the overall market, that means the overall market also reacted more or less to such kind of things for a while, a very short period. It came down. But if you look at the overall thing, I mean, if you look from here till here, Amazon actually went up lah. Although not a lot lah. I mean, for Amazon, it has actually been trading sideways practically most of the year lah, between a band. Yeah. And this is actually again some statistic to look at. I just look at the interest coverage. That means basically the interest coverage for Amazon is about 16 times. That means it can actually pay their interest 16 times. Yeah. So of course, if the interest increase, yeah, then of course this you won't see it going to a rate or a negative interest cover lah. So this is actually the impact to the company is not going to be so big. Yeah, it will eat into some profits, but it's not going to be too big. Okay, then the next one you actually see is Apple, right? Yeah, Apple. I mean, you can see more or less similar trends like coming down, rates up, coming down, rates up, coming down, rates up. Yeah, and overall you see that the full year, right, it is actually going up. And again, if you look on the longer horizon, all these kind of things will not have a major impact on strong stocks. It will not have a major impact. Temporary impact, yes. I mean, that's why depending on whether you are a trader or whether you are an investor. If you are an investor, a long-term one, right, technically you don't have to worry about these kind of things. because the company continue to generate earnings, right? And they have a growth rate of 20%, 30%. I mean, if you have a growth rate of 20 to 30%, right? And what is the interest element to you? What is the interest element to you? Apple interest coverage here is 41 times. 41 times. So what's another increase of 1% of interest to Apple? In fact, a lot of big companies, right? Technically, they don't need to borrow. Technically, they don't need to borrow. But because debts are so cheap, right? It is actually cheaper to use the bank's money to to build their business or to invest. And to the extent it's even cheaper to borrow money to pay dividends. A lot of big companies take the bank money to pay dividend. Yeah, I mean, if you get free money, right? I mean, when the rates are practically at zero, right? You get free money. So when you get free money and you pay your shareholders 2%, good what? Why use your own money? Yeah. So on big companies, less things to worry. If you actually invest in companies that have no uh, earnings, that means loss making. Okay, borrow a lot of money. Okay, these are the companies which you need to be afraid of if you are investing lah, or even if you are trading these companies. If you look during this time, the impact on so-called again talks or hype in the market on interest rate hikes, right, will have a bigger effect on these companies, this type of companies, rather than the strong ones which I'm actually talking about. Yeah. And again, next one is actually looking at Microsoft, right? Yeah. So over a long term, the trend is always the same. Interest rate go up, come down, go up, come down. I mean, short term it might have an effect, but over the long run, right, you can actually see Microsoft is actually going up, and Microsoft interest coverage is 32 times. 32 times. Yeah, you see the financial strength. Uh, just just hang a second. I need to actually on my battery. Okay. Okay. Yeah. So this is actually Microsoft. And Microsoft financial strength is 7/10. 7/10. Interest coverage 32 times. Okay, nothing to worry again. Okay, Cisco. Cisco, again, you look here. This one even no impact. Interest rate go up, you see the share continue to go up. Yeah. Only during the start here, yes, but post that I don't even bother. You see. Don't even bother go up. Yeah. Because you see Cisco interest cover is again 34 times. 34 times. Netflix, yeah. Netflix interest coverage is actually very small, six times, 6 times. Of course, then the impact can actually be bigger. But let's see the impact. You see, coming down here, also coming down. Normally, the effect would be before, more or less, come before the actual, because before the rates goes up, there is already a lot of talks. That means before the rates actualize, there's already a lot of expectation coming, and as a result of that, the market already upfront discount the prices. Yeah, here rates continue to go up, it also continue to go up. Market bullish at time, correct. Yeah. So here again, overall market come down. I mean, it's not so much of interest rates. Yeah. So now again, it came down yesterday, I think. Yeah. So more effect on Netflix. No. Facebook, nothing lah. Here go all the way up lah. Yeah. So of course, during this time, it actually had a lot. You see a big down here, right? A big down here, right? And it went up. Yesterday also, Facebook went down. I think initially it was up, but then after that, it was actually down. You can see a red bar here. Red bar here. Interest coverage don't have means no debts. I'm not sure whether Facebook have debts or not, but probably they don't have borrowings. That's why this is actually not applicable. Yeah, got a debt to equity here at 0.1, very little lah probably. Okay, this is Google lah. Google financial strength 8/10, 8/10 lah. Wow, interest coverage 257 times. Ayo, don't need to see lah this one. You see, interest rate go up, go flat, is it? Interest rate go up so much. It was actually flat here. No impact, no feel, no feel. This one no feel one lah, this one. Interest rate come down, you go up. I mean, interest rate go up here, interest rate go up here, come down. No, here going up, going up. So no feel this one. Too big this one. Yeah. Intel. Okay, Intel interest coverage 37 times. 37 times. This one also, you see, interest rate go up, it go up. Yeah. So if you look at the correlation, technically, I would say out of all the stocks which you actually saw just now, right? I mean, not a lot of, I would say not a lot of correlation. If it is actually a strong stock, whatever comes is more market during that time rather than specific related to this particular reason of interest rate. Yeah, interest rate for the strong tech stocks. But of course, for the not strong tech stocks, the one where people like to chase, got very nice future but no profit yet. Yeah, so those would be more relevant if if there's actually a rate hike. People would actually be more sensitive on this kind of stocks. Mainly, I think coming out from the valuation perspective. Yeah. Okay, so this is actually what I actually want to cover today. If you have any questions, right? Any questions if you actually want to ask, please put into the chat. Any questions can put in the chat. Any comments also you can actually put into the chat. Okay, so today Black Friday is actually coming this Friday, right? This Friday. So the stocks to actually watch, of course, is the retail stocks. Amazon is actually one, and because Amazon has actually came down yesterday, right? There was actually an opportunity for us to actually put in a position. This is our position. I mean, what I've actually put in yesterday. Right? Today is still red lah, about 12 points down. Let's see. Amazon. AMZN. Okay, Amazon was actually down about 104 points yesterday. 104 points yesterday. Yeah. So we are actually looking at this 33 level 3300. Yeah. I mean it's actually about more than, if not mistaken, more than one standard deviation. Let me check. Amazon 3300. January position. 345. Is within one standard deviation move. 3300 would be delta 20. Yeah, I mean for standard I mean standard for bull put spreads at delta 20 would be quite I would say for me I mean at least for me not a recommendation, but I would say generally 20 would be quite a okay level for bull put spread. Yeah. And of course, I mean, to me, I don't care. I mean, if Amazon can continue to actually come down because people are have reaction on the interest rates, right? I mean, the position is actually in January. We're doing up to January. And of course, we have a lot of time for recovery, even if it actually comes down. So to come down to 330 is about another 270 points, 270 points. Yesterday, already taken 100 points, man. To do another 270 is technically you're talking about another 5 or 6% down, you see, from yesterday. Yesterday it went down about 2.8%. Yeah. So 5 or 6% down in a short period of time. I don't know. Amazon, what do you think? What do you think? Yeah. What else is shopping? Um, Victoria's Secrets. Victoria's Secrets. Okay, Victoria's Secrets went up a lot post earnings. Post earnings. Yeah, post earnings. Too many people buying Victoria's Secrets. Do you guys know what the Victoria's Secret sell or not? Do you guys know? Or any girls there? I don't know what the Victoria's Secret sells. Yeah, but I know it's for girls lah. Okay, Foot Locker made the announcement. It was actually down. I mean, last week I already said, right. I said Foot Locker is selling shoes, right? Selling shoes, and Nike earnings was down, right? I mean, Foot Locker would probably be down, right? Did they down or is the market? They were up. Reported 193. Estimate is 137. Surprise 40%. Right? But you see, Foot Locker is down. Yeah. But I didn't do any trades on Foot Locker. I mean, it's not really for me. It's not really a strong company like Nike lah. I mean, it's basically just a pure retail selling shoes, is it? Selling shoes. Yeah. Apple we saw already. Then other than that, Nike. Okay, Nike is here. I mean Nike, like I think I also mentioned on Nike, right? Technically, for me, it will just trade in range for now lah. Yeah, I mean there's no catalyst for it to actually shoot up fast, is it? So for this type of stocks, the only thing which I do lah. I mean for me, I would just put both spreads both put spreads. Yeah, just for it, don't move anywhere. Don't, even if you go up, it's okay. As long as it move in range, don't come down, it's already fine already. Then you would be able to profit from this kind of trades. Yeah. Han Hok, how do you know ladies wear? Victoria's Secrets, right? Ladies wear. What type of ladies wear? No need to comment. Okay, Nike, Foot Locker, earnings. What earnings is coming out this week? Earnings. Okay, we have a few more minutes. I mean, I just finish up. If you have any more things, earnings. Earnings calendar. Autodesk 23rd. No, this today. Xiaomi, HP. HP is 23rd. HP is trading. Is HP Inc. Yeah, HP Inc. Okay, HP Inc. HP is trading about $31. I Best Buy, Dollar Tree. Okay, Dollar Tree may be interesting lah. I mean, but this is all today, right? DLTR, because Dollar Tree have actually run up a lot. DLTR, earnings already what? Before market open, yeah, earnings. But Dollar Tree have actually run up a lot. It was actually about $84, $84, and now that was actually in September, end of September. Now it's $132, $132. Yeah, but I would expect Dollar Tree to actually post earnings to come down, lah. Huh? You Yes, actually gap up about 2 or 3 days ago, right? It gap up from $112 to $132. Maybe I show you here. DLTR, right? You see Dollar Tree? Okay, you see Dollar Tree, right? Yeah. See Dollar Tree gap up, right? Gap up. Pre-market is 130. 130. I would expect whatever announcement comes out, Dollar Tree to come down. It'll probably come down to 112, 112. Yeah, 112. That's my view, because most of the stocks which runs up pre earnings by too much, tend to come down. Yeah. All types. Very. I ask you a stocks. What stock is interesting? Not what kind of ladies wear is interesting. Okay. Facebook. Currently, I'm not doing any Facebook lah. I mean, the Facebooks which I have is the past carry on bull put spreads lah, which I've probably entered in October when it actually came down here. Is it October? Yeah. The October, November, December. Yeah, the ones which I did in October. Yeah, on October, some bull spread position, which is doing quite well right now, lah. I mean, doesn't matter. I mean, Facebook can continue to come down to 330 is also fine, because the levels is mostly below at 310 or below. Yeah. No other direct bullish transaction, apart from the one which we did here. We exited up from here already. Yeah. Apart from that, nothing on Facebook's. Okay, so I think that's all. I mean, I also won't take up much of your time. It has been a good session today, I think, just to give a bit of perspective to you guys, especially for those new traders who are not familiar or how the actually market works with this kind of news or things like, and mainly news drive knee-jerk reaction, knee-jerk reaction. Yeah, and that is the time not to panic. Not to panic. Yeah, and if you're already in a position, then of course, if you panic, then that can actually go against you. You have to be a bit cool. I mean, yeah, this once you're familiar, it's okay lah. I mean, it can come down, prices can come down, but of course, it can normalize quite fast also, yeah, depending on what stocks you are in. If you are in strong one, then not to worry so much. Yeah, if you are in the weak ones, then you worry a bit lah. Yeah, because it can actually come down quite a lot before it actually go up again. Yeah. So okay, so that's all from me. Yeah. So for those who have actually joined us, great to see you guys. And I will see you again next week, same time, 7:30. And again, if you have any topics, if you want to actually for me to actually cover, right? Yeah, let me know. Put it in our Facebook page. Let me know, and then I would actually see what I can actually do. Yeah, and I will share with you. I mean, whatever interesting things which I know. Yeah. Okay. So until then, I catch up with you again. I see you again. And don't forget to train, trade, and thrive. Yeah. So this is Ming Hon signing off from Trader's Talk. Bye bye.